Now, with the overall stock market basically once again sitting at all-time highs, which seems like a normal thing these days. A good question I've been hearing from a lot of dividend-focused investors is it better to keep buying consistently, buying dividend-paying stocks and ETFs, building out the portfolio, or maybe is it a good time to sit on your hands, keep some cash on the sidelines, and wait for buy the dip opportunities? Now, even though I personally add to my portfolios every single day the market's open, whether stocks and ETFs are green, whether they're red, I'm consistently adding more and more assets to my long-term portfolio. I do always like to have a good amount of money on the sidelines, especially for red days or even potential crashes, just to have a lot of firepower if and when some of my favorite names, as far as dividend-paying stocks or ETFs, go on sale. So in this video, I'm going to share with you guys where I've been storing some of my idle cash in two very safe, virtually risk-free ETFs that are still consistently paying me dividends and is keeping my money busy until, of course, we see a buy the dip opportunity, which maybe we'll see sometime soon. This video is definitely going to be helpful for you guys. If you've been asking yourself the question, is it worth buying names in the stock market currently because everything is just so expensive? I'd like to say that if you're a long-term dividend investor, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So again, just to be completely clear here, I personally, because of my personal strategy, buy dividend paying stocks and ETFs every single day the market's open. I know some of you guys might only dollar cost average down. I know some of you guys might lump sum invest. Everyone has their own strategy and everyone is entitled to their own strategy at that. Now, because of my long-term goals, I don't want to stop buying even when the market's very green. I want to consistently add more and more assets to my long-term portfolio, even if they are a bit expensive. But I also want to keep a ton of cash on the sidelines, which is exactly where these two ETFs come in very handy. Number one being WEEK, or the weekly T-bill ETF, which invests in 0 to 3 month US Treasury bills and seeks to pay weekly distributions to shareholders. The other ETF I've been buying like crazy and keeping money on the sidelines, or SGOV, the iShares version, the 0 to 3 month Treasury bond ETF. Now we're going to go through both of these two ETFs because I personally like these two the most out of all the other T-bill ETFs across the market. I'm going to share with you guys what they are, how they work, etc. So first off, this is a relatively newer ETF. This is the WEEK ETF. It says the Round Hill Weekly T-bill ETF, or WEEK, is a short-term Treasury bill ETF designed to pay weekly distributions of current income to shareholders. WEEK is the first of its kind to target a stable NAV. WEEK is an actively managed ETF. Now, the cool thing about WEEK is that it has been offering a very stable price. It goes up a little bit and then it drops and pays you weekly distributions, and it's done so ever since inception. Now, as of right now, the distribution rate for WEEK is 4.1%. So again, you're not going to be able to earn anything crazy necessarily off of these Treasury bill ETFs. But again, if you want somewhere safe, relatively safe in my opinion, I personally look at these ETFs as basically risk-free. I know there's always risk involved with everything though. With the WEEK ETF, it seeks to pay distributions every week, offering a recurrent income stream for shareholders. And the next reason is basically why I'm using it. Cash-like alternative. WEEK provides exposure to US Treasury bills with maturities between 0 to 3 months, providing an attractive vehicle for investors seeking capital preservation. Now, my strategy is pretty simple. I like to invest all my side money inside my brokerage into things like WEEK or SGOV, and then if and when there's buying opportunities beyond what I'm already personally buying every single day, which is a decent amount, I would then go into these two positions, whether it's WEEK or SGOV, sell off some shares of it, which you're basically going to sell it off exactly where you bought it because they have stable NAVs, and then use some of that cash back in the brokerage account to buy whatever the case might be on that given trading day. Now, I know some of you guys might be saying, well, some brokerages like Robinhood, Gold, and others actually offer you a decent amount of yield as far as your cash balance goes inside the portfolio, and that can also be another alternative. I'm just saying, for me personally, in the brokerage accounts I use, I don't necessarily earn all that much as far as yield goes with the cash balance in the portfolio, so I actually have to go ahead and buy into different short-term Treasury bill ETFs, which is not a big deal whatsoever, and it's definitely been helping me generate a lot more yield that I wouldn't have otherwise for the brokerage accounts. Now, lastly, it says stable NAV. WEEK seeks to target a stable NAV week over week. Now, again, looking at the performance as far as market price goes, WEEK has been very stable. And because this one offers weekly distributions, it's kind of handy because you get even more cash into your portfolio a little bit quicker than SGOV, which we're going to go over here in a second, which could be helpful, especially if you want a bit more cash in the portfolio to buy more and more stocks and ETFs with that distribution. Now the distribution rate for a week is around 4.1% like I said, and as of the most recent distribution history, about 7 or 8 cents per share over the past several months. Now moving into my next favorite, short-term treasury bond ETF. Both SGOV and WEEK are worth looking into if you guys are seeking some short-term treasury bond ETFs to add to your watch list. Like I said, I personally buy into both of them. I think I started buying into SGOV a lot longer ago because it's been trading forever, and WEEK just as of recently. So the investment objective for SGOV is very similar to WEEK, but it says the iShares 0 to 3 month treasury bond ETF seeks to track the investment results of an index composed of US treasury bonds with remaining maturities less or equal to 3 months. So short-term treasury bonds once again. It says why SGOV, exposure to US Treasury bonds with remaining maturities less or equal to 3 months, targeted access to a specific segment of the US Treasury market, used to customize your exposure to Treasuries, seek stability in your portfolio, and put your cash to work. Now the 30-day SEC yield for SGOV is a little bit higher at 4.22%. But more or less, both these ETFs are pretty much doing the same thing. They're allowing you to stash some of your cash on the sidelines, earn a decent yield right around 4% or so as of right now, and sort of keep your money liquid, ready to go, of course, if and when there are buy the dip opportunities throughout the market. Now, I know generally speaking, some dividend investors actually utilize a portion of their portfolio to buy into things like fixed income, short-term treasury bond ETFs like SGOV or like WEEK, just to have some more stability in their long-term portfolio. But for me personally, I'm not necessarily doing that whatsoever. I'm just looking for somewhere to stash my cash up until there's red days in the market and earn some decent yield while doing so. So I hope that gives you guys an idea of what I've been doing, utilizing as of recent, especially when the market's been at all-time highs, to take some of my cash and keep it ready to go on the sidelines while still earning a decent yield from it. Now, because these days my long-term dividend portfolio is sometimes earning hundreds of dollars per day or even sometimes thousands of dollars per day, I like to then utilize those sort of ETFs to buy into if I don't really have anything as of that moment that I want to buy into for my long-term portfolio. But lastly, before I go, I do have a question for you guys down below. When it comes to keeping your cash ready to go on the sidelines, earning some yield from it, which ETFs or strategies are you doing right now, especially while the market is still rocketing up to all-time highs? Let us know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.